Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing mixed markets around the world again this morning, which has so far been the theme of 2014. We have Europe down small. The Nikkei bounced back hard, while the Shanghai tried to be green but couldn't hold. So in terms of our markets, yesterday we tried to get going, but the move wasn't too powerful. So, Scott, a lot of people are talking about how the first 5 days of January can set the tone for the month, which can set the tone for the year. And what do you think so far?
So far, everyone's looking for a lot of tone setting.
Right.
You know, they should go to the gym and get a, set the tone that way, not with, all the emphasis on the first few days. I understand what everyone's trying to do with the whole projections and the predictions. And, after a year like last year where so many people missed out on the rally, or some people joined late, or some people are figuring out how to get involved, it's a little bit complicated. But with that being said, we've had about 5 days underneath our belt. And, if you look around the world, nothing has been too different, okay? Mm-hmm. China, which has been the weakest country or market from last year, continues to be weak, so we'll see if something changes there. The Nikkei, which was really strong last year, that had some profit taking, was up 1.9%, so it snapped back quick. And then you have Europe, which was kind of a lot like our markets, where, closed really strong, had a few days of profit taking off the open, and then had a stronger session, and now it's still kind of lethargic. That's kind of what I feel like is going on here. We've had profit taking, we've found some support. Some people don't know what to do as far as allocating funds, whether they need to be, further invested, or we're going to get that 8 to 12% pullback. So you have a lot of back and forth, but what's been going on is lots of stock movement, lots of tactical trades igniting, lots of situations where if you, are looking around for chart patterns and breakouts and names that you've been rewarded more than trading just the indices.
All right, so let's let the chart then tell us, because after a lack of power in our markets yesterday and our futures off a little bit this morning, what are the levels that we should be watching? That
makes a lot of sense, because right now all we know is we have a low in at 1823. We go to the chart, you look right here, that was the low from, Monday. Okay, so with that being said, this is just look at the last 10-day ramp up. This was that Fed day. That was that red dog reversal down here at 1772. So from 1772 to 1848, quick math, 60 handles or so, why not a little small pullback of 1% or so? So with that being said, we're above the 21-day, we're above the prior high. Yesterday, didn't have as much power as some would have liked, but I think that's fine considering we have the Fed minutes today at 2 o'clock. We have a jobs report on Friday. But I think the longer we stay above this area and digest this most recent move, the higher the probability we take out this 1848. Just no need to be all in, but I definitely wouldn't be all out.
Well, as you said, it has been very stock-specific action. If we take a look at high beta tech, the action has been very mixed. And if you take a look at the best and the worst of the group, it's almost like a tale of two completely different tapes. We've got Google, best in breed, whereas Netflix is very weak.
Right, and when you're trading momentum names, you need to follow the trend and look for differences or when things change. And as far as Google's concerned, Google had this huge gap up after earnings. Okay, you look at the chart. This gap up or pro gap means power. Then from there, you had many different chances to add or just trade. You had one right here, one right there. Then you had another one as it broke out here. And then recently, to start the year, it held the 8-day and then broke out higher. That's a nice looking trend. A lot of guys in the community taking advantage of it. Then you flip to the other side and you look at Netflix, you have a different trend, right? This was, first of all, look at that earnings. Okay, that's when it was sold. So right there, that was a little bit of a bear sign, and they definitely grinded it higher than some would have thought. But then look what happened right here. It broke. It broke this accelerated uptrend. For the first time, it had a clean, decisive break below the 8-day. And then, more importantly, it didn't bounce back. Other times that's happened, it's bounced back. Whether it was here, came back up, or here, came back up, or even on this, decisive, came right back up. So that gave to the bears a little bit of, I would say, conviction. Maybe it's time to short this thing. So right here, broke this area, got downgraded yesterday. Maybe look today to see if there's some, if you were long and you got out of it there, or you're just a trader looking for a tactical play. Here you go. This is yesterday's low of 337. If it breaks below it, comes back above it, the drill. That's a red dog reversal for a trade. Maybe it tries to go to the 100-day first and tag that. But overall, it lost its go-to status, and now Netflix has just turned back into a trade.
So we have Google and Netflix at two different sides of the spectrum, but then in the middle we have Apple and Amazon, where they're sort of in the middle trying to figure out what's next. How do you think they resolve?
Well, Amazon, I remember I was looking at that, and Netflix as the ones that were a little weaker. Amazon broke below, but it snapped back a little quicker, but I still think the jury's out there as far as what's next. You look at the chart here of Amazon and you'll see, this was that topping tail that had me thinking short the next day, and I did short some, but then it held the 21-day, and then yesterday you had an inside day, popping back up. So I'd say this is your upside range here. The longer it stays close to 400, the more it could be working off this negative tail there. But overall, I don't think you should be in a rush to buy or to sell here. Maybe let it see if it could, again, go sideways and figure itself out. It hasn't been a great, clean trade for a while. And then you go to Apple, that's been pretty disappointing. I know for me, first of all, you look at the double bottom since the summer. It became a good second half story for me, at least, to make some good money. Lots of different times, it broke a descending channel, and you had a good 20-point move. You had it here. You then had this really clean one through Thanksgiving. And then I thought after the China mobile news, it could hold this gap and continue. What happened? It filled the gap and showed you it wasn't ready yet. So I guess in perspective, not the biggest deal, except for you could have used 562 as a stop. You could have used 551-ish as a stop. And then, it was a little, I would say, just disappointing. I went long yesterday and then it got hit hard. What did it do? It held the prior day's low. So I guess the best we could hope for is maybe some sideways action, and then if you're bullish, a breaking above this descending channel. So what you know now is resistance stands around this 545-ish, and then here's your support, here's your trend line. So let's see what kind of action we get in this area before it picks what's next.
What about Baidu? There is a tight setup there. Could we get a new momentum trade there?
This one looks a little bit better. It's been, every time it breaks out, it comes back in, and it's definitely a little bit erratic, but when it breaks out that day, just sell it on the close. Don't wait for the next day to get the follow through, because there hasn't been a lot of follow through. And if you look here, I'll show you what I'm talking about. You had a really nice breakout here. I remember this one, to then get engulfed, and then you had another nice breakout here, got engulfed, and now it's trying to get back up to this area. Yes, it's near the highs, and people scratching their head. China's been really weak, but this stock doesn't seem to care. It's been riding the 8 and 21 day. But as a trade, if this were to get above 180 or 181, perhaps it makes another move. Okay, and then you could see even higher prices. So this is on our radar to break out. You have some other decent action in something like Sina that's on the move back up. You have Sohu, on the move back up. So some of these China names are acting okay.
All right, well, coming up, we're going to take a look at some potential setups worth a look today. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some potential setups that are worth a look today. Let's start with a laggard name that has woken up a little bit lately, Noodles & Company. Scott, do you think this is ready to pick up some momentum?
It is a laggard trade, so you have to be a little skeptical, but I know last year it looked good and then it just wasn't ready, and that's what happens with new issues. Sometimes it takes 6 months, a year, 2 years, who knows. With this one, it didn't have the earnings power, but we'll see what it wants to do now that some of the maybe end of the year selling is done. You look at Noodles right here. This was that range that was very tough to deal with. I remember it. I think I bought it here, I bought it here, I bought it here. So obviously you see I didn't do so well there. Broke to the downside. Then you have this descending channel here. Descending channel that finally, broke to the upside, then it held, went sideways, and then yesterday woke up. So with that being said, I am long some, and I do think if it takes out the high of 37.70, perhaps it tries to retrace to about this 39.80, where, for a tactical trade, I think it's worth a try, and then who knows, maybe there's even more than that.
Nuance could be worth a look today. This one has been holding in okay. What level would you say it needs to clear to get some better action?
Well, this one has been a disappointing name. Everyone always thought, oh, okay, Carl Icahn's involved, Siri, Apple, new technology, and it just never got going. And then with that being said, at the end of the year, it might have been sold off a little bit harder because there wasn't that many companies or stocks that didn't perform where you could have gotten a loss. So with that being said, this is like a January effect type of scenario. You look at Nuon, you look, where it came from all the way back down. You had your bounce back, sideways action push, and now it's getting tighter again. So with that being said, I also nibbled a little bit here. I think it looks decent. If it were to get above 1540 to 1550, perhaps it has a move to 16 and maybe even a little bit higher into the moving averages. Again, laggard January effect type trade, so it's not easy, but you can put it on your radar.
How about GoGo? Nice move there yesterday. Do you think we can get some higher prices today? Maybe some continuation?
Well, we talk about a day one. The chances, the situation is, can you get day two? And sometimes you do, especially with a stock that was such a good one last year. And you look at the chart here, this one was very successful. Look at this IPO, went public here, went sideways for a while, then finally woke up, then had a huge gap up, ran to 35. It's corrected ever since, and then yesterday you finally had a really nice break to the upside. So I'm on the floor watching it. We were all, wound up breaking above it, reclaim the moving averages. So it could be back on track. So above, 2640, it could continue to maybe 28 to 30, and maybe even at some point new highs. These new issues, if they get back in vogue, they typically are a good concentration point.
Right. How about Tesoro? Tight pattern there. Are you expecting a breakout?
It would be nice. Okay, this one has been going sideways for so long, and I'm sure if you've bought strength like I did yesterday and it doesn't break out, you get a little upset. You look here, it's a tight pattern. You know what? One of these days, all these people that have been accumulating hopefully get a little rewarded. Yesterday, it reversed, closed near the highs. I am in this one too. I feel like I have too many positions going on here. But anyway, every one of them have a reason, and this one has a nice tight pattern. If this were to get above 58.50 and hold above, perhaps it could go. There are some names in the group acting better, like VLO, which has been, following the 8 day, broke out. So maybe people are looking for something to do, and this is very tight, so put it on the radar.
And Tesla, we know this was a big mover last year. The pattern's been getting tight here, so hopefully it'll pick a direction relatively soon. Which way do you think it might go?
At this point, I'm cheating long because it hasn't done it yet, so I got along a little bit yesterday. This stock was really good last year. It was a momentum name. It followed the 21-day. It broke out. You laughed, you cried. You cried if you were short. You laughed if you were long. Now everyone's kind of scratching their head, including me. So you look at the chart, and you'll see this was the trend from last year. Multiple buy points here and here and here. And, it did retrace, and look at the retracement, somewhat healthy. Held above the moving average. It's been going sideways, and now it's getting tight. Anytime Tesla gets tight, it doesn't like to do that, considering the short position and the amount of momentum guys looking for a long. So with that being said, 146 could be your out, and if it does get above this 150.40 with volume, maybe the next trade takes you up to 157, and then that is more of a macro downtrend versus this minor one.
All right, let's do some quick hits. Let's start with the banks. We know they've been a bright spot. Let's talk Scott's #1 bank pick. Bank of America upgraded this morning by Jefferies.
Yep, and yesterday, I sold some strength, and I was buying it back around, I think, what was that price? 1650-ish, and now the upgrade helps. We'll see if it can make new highs in the year. I don't know if it will today, but overall, you look at the chart, people are like, oh, what's wrong with Bank of America? That was yesterday. I'm like, what are you talking about? 4 days to the upside. It's not allowed to have one pull-in. Anyway, the 21-day and the 8-day are well below it. At this point, it's up pre-market. I think it was also focused on Kramer. So 1679, that's the pivot. I'd love to see it get above there and head towards 17. I'm there, and I think it acts very well with Citigroup and some of the others.
How about over in social media? Twitter's looking weaker. We talked about that wedge pattern that had been building, and now it looks like it's resolving lower. What do we do here?
If you saw it yesterday, I bet you there's some people short because it had a big wide range engulfing bar, not to the upside, to the downside. I actually thought it would go to the upside. That's why you always want to wait to see what the market says and how it confirms. If you have a thesis and the market doesn't confirm it, you get out of the way. And I don't even think I traded Twitter yesterday. I was in Facebook. It acted a little bit better. So with that being said, you go to Twitter, this was the wedge type pattern. This was a good area to buy around 42 when it took out the prior high. That was your peak. First move lower. Here was your lower high. This engulfing move it was pretty drastic, took out the prior day's low, so some people are probably short getting paid into this downgrade. Now the question is, what does it do? Okay. With that being said, look at the 21-day moving average. It hasn't been violated since it broke out. So some people might try and come in and buy around 60-ish. Here's your prior pivot at 58.50. So between 58.50 and 60, Maybe you try and see if you could trade versus a low, but if it closes through this, chances are, you have to then start mapping out some bigger support, which comes in around 55, and then the IPO high. Lots of downgrades lately on this one.
All right, and lastly, what do you think about Solar City? Still trying to hold the gap from the Goldman upgrade.
Yeah, this one people would have thought it would have powered through, but again, up 5% or 8% a day, it's still hard to take out old highs. You still have a lot of people that need to get out of stock, and it poses resistance, but blah, blah, blah. Let's just trade it versus the gap. If you are trading it, you look at this pattern here. We've talked about this stock many times in the past year. It tried to break through, didn't have enough power to break above prior resistance. Yesterday it held in there, so I'd say as long as it stays above 62, 65-ish, that is your support. Okay, you do have the moving averages catching up. So with that being said, if this gap holds for the next few sessions, I think next time it tries to get above 65 and go, it might have a little more success.
Well, as we said, lots of individual stock action out there. What will you be paying attention to today?
I have a lot to. I think if you look at the VTF, I don't even know how many longs. I have 8 to 9 longs or 10 longs, but I went over a lot of them here, and you have a reason for them. So as long as you have a reason why you're in a particular name, then it doesn't matter how many you have, as long as you have a plan. If it goes and continues, if you want to add, or if it's on a third or fourth day and you want to trim, or if it's a day one and you're looking for confirmation for day two, these are all the tools and tactics we try and teach all of you, and we try and give you, the tool belt so you could follow along with off the charts. Off the charts yesterday, I think we had, RHT was on there. Really nice move. Look at that. We talked about the educational purpose or the reason behind this gap up and the continuation. I know yesterday on the VTF we talked about VMW, came along that yesterday. Look at the size of that move through resistance. So then you come into some different things like we went over today with noodles, or which is a day one, or even some of the refiners that are laggard. So as long as you have a reason why you're in a trade, you stay in it, and then if the reason you are in it changes, you get out.
Right.
And I'll do that every single day. I'll do it during every different market process. And right now, we're in one of those spots where the different or individual names are where to be. The indices still need to pick a direction.
And with that said, happy trading. Have a great day.